what Deloitte is pegging into their wish list ahead of the union budget on compliance and tax reforms. My colleague Anurag Shah caught up with Gulzar Didwania and Anil Talreja for the exclusive Deloitte dialogue conversation. Let's take a look there.
Hello and welcome to this special Deloitte Dialogues Budget Show. As India prepares for the union budget, tax framework are clear and pressing. Simpler laws, greater certainty, faster dispute resolution and policies that genuinely support growth, investment and innovation. From international taxation and transfer pricing to GST working capital challenges, from custom reforms under FTAs to personal tax clarity for global professionals, this budget is being seen as a crucial opportunity to fine-tune India's tax architecture for rapidly evolving economy. To decode what the industry is looking for from the finance minister in this budget and to understand the fine print behind these expectations, I am joined by two leading voices from the Deloitte India. First, Anil Talreja, partner at Deloitte India with deep expertise across corporate tax and policy matters. Along with him, we are joined by Gulzar Didwania, partner at Deloitte India, who closely tracks development in indirect tax, custom and trade. Thank you so much, gentlemen, for joining this special show. I'll start with Gulzar Didwania. Sir, with the geopolitical risk and shifting trade routes, what custom and trade facilitation reform you are expecting in this upcoming budget? What is your wish list, sir? Can you share with us the three top expectations in this budget you want from Madam Finance Minister?
I think with the big bang reforms in last year, September, about GST 2.0, Honorable Finance Minister made an announcement in December last year that now it is time to go to Customs 2.0 reforms. With this and to make, Indian trade competitive, I think maybe there are duty exemptions, concessions that industry would want, but my top asks are around how can we facilitate the trade, which will automatically result into competitive trade, for India as well as the globe. So the top four asks are as follows. The first ask is to enable a single window clearance mechanism for importers and exporters. When today an importer imports goods, from multiple countries, there are multiple licenses required. Similarly, when I'm exporting goods, there are license requirement for each and every product that we need to know. And there are different ministries who actually regulate these requirements. The ask is that because custom is the custodian for import and export of goods, the single window facility should be enabled by the customs authorities, whereas an importer and exporter, I should only go to one authority, which is customs, to know what my requirements are. So this will go a long way in improving the trade facilitation. Second ask is with respect to providing definitive timelines to give certification under the Authorized Economic Operator Scheme, which is also called as AEO scheme. Currently, there are no timelines prescribed, and therefore it takes months and months for the industry and the taxpayers to get the certification. AEO actually gives you certification that government trusts you, and therefore you are a trusted taxpayer, you are a trusted businessman, and therefore having definitive timelines in AEO scheme will also go a long way in terms of providing certainty and clarity to the taxpayer. Third aspect is to boost exports from the mover licensed premises. We should extend the benefit of road tax facility to these mover licensed facilities as well. Currently, if I'm exporting from a DTA, therefore I'm entitled to get road tax incentives, but that benefit is not available if I'm in a mover license premise. So that's another ask that I think can be considered. And fourth, last but not the least, there's a lot of idle capacity right now in the SEZs, which actually are doing manufacturing, and also due to the reduced global demand due to tariff uncertainties. Following the global precedent or global practices on how the duty should be levied when SEZ unit supplies in the country itself where the unit is operating. So the ask is that the duty should be levied on a duty foregone basis, which means whatever duties I have got exemption at the time of import. And if I'm doing manufacturing and selling the goods in the domestic tariff area, I should be required to pay duty only on the duty foregone amount. This is in line with global best practices. This is in line with the EOE requirement, and this is in line with the MORE requirement as well. And therefore, bringing this concession to SEZ will also help in import substitution. These are top four asks from my side from a custom standpoint,
For us,
which
sir, would
can
you
help
agree that in
big
last
win.
few budget on the custom front, there were not many announcements, so now your wish list is little heavy. Would you agree with my thought?
Yeah, because it is customs 2.0, and therefore a lot of expectations are there. We need radical reforms in the customs laws as well as the customs administration to bring these facilitation measures.
Radical reforms in customs like GST 2.0, which got implemented from 22nd of September. Now time has come for the customs 2.0 reforms also. I'll move to Mr. Talreja. Anil sir, as we head into the budget session, so how will you describe how is the mood of overall mood near the budget? Is the taxpayers of India is optimistic near the budget, or they are little anxious that something more burden may come in?
Well, in my view, the mood of the taxpayer is very optimistic. Just picking up from what Gulzar said, I think insofar as income tax is concerned, the 2.0 moment has already happened. We already have a new income tax act which got formalized in the last few months, which is as of now expected to take effect from 1st of April of 26. So to that extent, I think the mood is quite optimistic and positive. And the motto behind the new income tax law has been simplification of the law and trying to use as much as provisions to keep it much more taxpayer friendly. So the mood is very optimist, and there are a few asks, no doubt.
Sir, do you also
But
think that now on the income tax front there is not much to offer by government, because new income tax act is already there, which will be implemented? More than 90% of the income tax payers are moving to the new tax regime, which is very simplified. So there is not much for government to offer only.
Well, I don't know whether the government feels so, but I can tell you that the taxpayers do have a couple of very large expectations, and these are to some extent quite reasonable expectations. Uh, One of them is the whole taxation of capital gains tax. The law in this particular area is fairly complex. Today our capital gains tax provisions are different for different types of assets, different for assets which are acquired in foreign currency, in Indian currency, different for different kind of period of holding, etc. So I think some amount of simplification there is expected, and that I think I'm sure the government will look at, as they've always
On the
looked at things very
capital,
proactively.
okay, sir. Point taken, sir. You mean to say that on capital gain front, more simplification is required, because we have heard from finance minister secretaries that after that 12.5% long-term LTCG across most of the assets, now it's completely simplified. No more changes are required. So what would be your suggestion on capital gain front, on LTCG front?
As I was mentioning, the government has taken steps to simplify, and the example that you gave of simplification of the rate or rationalization of the rate is a clear and a good example. But I think there are some other areas around capital gains tax regime which further need clarity. As I was saying, there are different ways to compute capital gains tax depending on the asset, depending on how the asset is acquired, and there's fair amount of ambiguity. Now, if the government is moving ahead with reducing ambiguity and bringing in more simplification, that this is an area that they should be considering.
Okay, more clarity is required. Guljar sir, before we slip into a short break, I want to get your take. With a lot of use of technology and AI, what do you think, that compliance is easy, or there is a excessive scrutiny?
I think if we look at it in a positive way, it is going to enable trade facilitation in a big way, and therefore the more industry is moving towards technology, more it is moving towards automation. It is better for the industry to be audit ready to comply in a better way. So I don't think so. The objective is to do more scrutiny. The objective is to do enable trade facilitation.
Okay, enable trade facilitation. So we'll take a short break now. When we return, we decode the more expectation from the union budget with insight from Deloitte India. Stay with us. We'll be right back.